Hey guys, what's up? Alec back with the daily stock market, and what an exciting week of earnings. Many stocks in the red on Friday. We just put out a banger video over the weekend of the 5 top AI stocks, so make sure you check that video out if you are interested in the best AI stocks. Now, what this video is going to be all about is earnings week, because as you can see, the week of February 27th, 2023 is going to be a huge earnings week, with Monday starting off strong. We have Fubo TV reporting earnings. After the close, we have Zoom and Workday. We also have Him and Hers, which is a penny stock at this point. Moving over on to Tuesday before the open, we have Norwegian Cruise Lines reporting, which could be a good one to be playing because we've seen how travel's performed so far. We have Target, another good one to be playing because last week we had Walmart, and we can draw some conclusions to Target's earnings based off of Walmart's earnings. Okay, we also have Advanced Auto Parts. After the close, we have Rivian, another exciting earnings. We saw how Lucid performed, but Rivian and Lucid are two totally different stocks, so keep that in mind. We have AMC reporting, which is a meme stock, momentum stock, and that one should be moving at a large percentage. Okay, we have Blink also reporting. Moving on over to Wednesday before the open, we have NIO, very exciting earnings. It's going to be scrutinized because of it's a China EV company, so we want to see those numbers coming in, see if China EV sales are strong or if they're dwindling. We have Lowe's, another good earnings to be playing because we saw what happened to Home Depot. We have Wendy's, Dollar Tree, we have Kohl's, Abercrombie and Fitch, Jack in the Box, some other random ones. Wednesday after the close, we have Salesforce, Snowflake. Thursday before open, we have Best Buy, Macy's, Kroger. We have Burlington, Big Lots, Portillo's. That's an interesting one. TD Bank. Okay, that's going to be a good one. After the close, we have Costco Wholesale. Huge earnings for Costco. Okay, we're going to dive into Costco in this video, so make sure you stay all the way out through the end of the video if you want to hear a Costco update. Now, ChargePoint is also Thursday after the close, Nordstrom and Dell, and that wraps up earnings week. So we have a huge earnings week. Let's dive into some individual stocks, starting off with Zoom. So what's up with Zoom stock? They're a good one to talk about because we haven't done an update on them in a while, and they were a huge winner in the pandemic era for stocks. We have them up 12% in the last month, and we have them up as high as 27%, $84 per share on February 27th. Okay, now keep in mind in the last year, they're still down 42%, and they peaked at a whopping $560 per share. They're down still around 86% from highs. So the question is, can Zoom climb back to around $100, $200 per share, or are they going to go below the IPO price of $36 per share? And more importantly, are they going to beat earnings or miss on earnings? So let's talk about it. As we scroll down, we can see that their PE is 32, okay, implying that they are a profitable company, and they're not a horrible deal at the current price of a $21 billion market cap. So here's an interesting article that I was reading into. Can Zoom stock thrive once again as the company refocuses on corporate clients? In addition, Zoom Video aims to morph into a broader communications platform. Fourth quarter earnings for Zoom stock are due February 27th after the close. Analysts estimate profits of around 81 cents per share for Zoom stock, which is down 37% from a year earlier. So their EPS is tremendously down. Their revenue is expected to rise 2.7%, however, to $1.1 billion. Zoom announced on February 7th that it will cut 1,300 jobs, or about 15% of its workforce, which is a good thing for its EPS and its profitability. But for the quarter that they're reporting on, it hasn't had enough time to come in effect, so it might be a bigger play for next quarter or for their guidance possibly as well. Now, Zoom cloud-based software sets up video calls with chat tools available. Also, customers can easily share content, but its growth in consumer market will likely continue to slow admin rising competition. Okay, Microsoft and its team's communication tools for a large company and small businesses is Zoom's major rival in the business market. And trust me, you do not want to be a rival of Microsoft, especially at a lot smaller of a market cap that's basically drowning right now. Their stock's down 86%, but their balance sheet reflects that they do have a lot of cash to spend, with their assets closer to 7.5 billion in assets with only 1.7 billion in liabilities. So they have a lot of spending power. Okay, so and they also have a lot of net income coming in, building up their net income tremendously. In 2020, we had a $25 million net income, and in 2021 we saw that grow by thousands of percent to 670 million on their in total income. But if we look at the quarterly, look at that, totally different story. Okay, yeah, 2022 was good for them as well, with $400 million in one quarter, which was 88% growth. But look at that, in Q1 of 2023, we're already seeing a massive decline for Zoom. So their net income is going down the last 3 quarters. Their total revenue is staying pretty stagnant as well, where in the past years before, they have been growing at enormous paces, hundreds of percent. They also have a strong history of beating earnings. They beat earnings on their EPS the last 4 quarters in a row. They are an interesting stock to be watching overall, but personally, I'm not touching them anytime soon. I want to see them go below $50 per share. I think there's a strong possibility we can see them at $55 and even $45 per share. So first, I'm going to set my alert for $55 per share. Once that alarm goes off, we'll be revisiting Zoom. I'm also probably most likely going to be staying away from their earnings, but as I dig deeper tonight and tomorrow morning, I'm going to be posting on my Discord any updates that I'm going to be playing with earnings. So if you want to join the Discord, major success has been happening all week long. This is success just from Friday, 74% gain, $540 gain, 166% gain. And these are all just success stories coming just from Friday, not to mention the earlier days and the rest of the week. So if you want to be at one of these success stories, just message me on Instagram. It's that simple, at the Daily Stock Market, and I'll send you over my website so you can check everything out for yourself and help you become one of the next success stories in my program. Okay, so moving on to the next stock, we have Rivian Automotive, down 4% on the day, 11% on the week, and they're down 41% in the past 3 months. So they could be a good buying opportunity right now if they're a good stock. So stay tuned, because throughout this part of the video, we're going to dive into, if, in my opinion, if I think that Rivian's a good stock, and if I'm going to be buying it for long term. We're also going to go over their earnings and if I think they're going to beat or miss. Now, they are down 72% in the past year alone, and they IPO'd at $106 per share and going up to around $129 per share before absolutely tanking down 86% on the stock. Headquarters, Irvine, California. PE ratio, they are getting very close to profitability. They still have a $15 billion market cap. Their EPS is all over the place. Sometimes they're beating, sometimes they're missing. It's an important date for earnings. They're going to be reporting their fourth quarter earnings after the bell on Tuesday. After a difficult year, Rivian stock has a chance to get back on the road. Okay, so we see Rivian stock gearing up to report its fourth quarter earnings on February 28th, and investors are watching closely. The electric vehicle innovator has struggled considerably throughout the previous year, and Rivian stock is currently down 72% year over year. Yet multiple experts have expressed bullish takes on the shares, naming the company as the most likely automaker to threaten Tesla, the leading role in the EV race. Questions have been asked recently as to whether Rivian is the next Tesla. These earnings will likely offer some insights into the answers. Shares have been falling all week as Wall Street prepares for earnings report that will reveal how the company really performed in 2022 as the bear market took hold. What exactly should investors be expecting when Rivian reports on Tuesday? Let's take a little bit closer look. Rivian has a chance to turn things around if it surprises Wall Street with better than expected earnings. But just what are these predictions that the company needs to beat? Wall Street expects a year-over-year increase in earnings on higher revenue when Rivian reports results. While this widely known consensus outlook is important in gauging the company's earnings picture, a powerful factor that could impact near-term stock price is how the actual results compare to the estimates. How likely is it that Rivian will deliver on these important metrics? Some experts are far from optimistic its earnings will signal the turnaround the stock needs. A bearish analyst warns investors that the earnings might not bring good news they're looking for. He believes that there's a lot out there that could cause Rivian's latest reservations figure to fall short of expectations, which will be a very important scrutinized number, citing concerns regarding production, competition, and macroeconomic factors that could negatively impact EV demand. As the analyst sees it, the downside risk from a disappointing earnings or guidance release outweighs any possibility Rivian will exceed Wall Street's expectations. It also doesn't help Rivian that fellow EV stock Lucid recently failed to meet its revenue expectations, pushing the EV stock down across the board. However, that doesn't mean Rivian can't surprise investors and push past expectations. It really just means that the risk is there on this earnings, and analysts are favoring, well, some analysts at least are favoring the downside ahead of earnings. And the best thing you could probably do is wait out earnings, wait for the stock to drop a little bit more, fall on earnings, and then buy up some shares for long term. Okay, we also see some more if you want to pause it and read the rest of this article. Overall, there's a good chance that Rivian is going to be missing earnings and it's going to push the stock closer to $15 per share. But remember, there's no guarantee that it will fall to $15 per share. That's just my personal opinion, and it's not financial advice. And staying on the EV trend, let's talk about NIO stock reporting on Wednesday before the open, down 5% on Friday, under $10 per share now, down 7% in the week, 17% in the past month. And we can see an easy support and resistance closer to $13, $12 per share at the resistance and under $10 per share on the support. So it looks like it broke that support recently. Okay, it could be signaled to go lower. Will NIO go below the IPO price of $6 per share? Remember, once upon a time, it was $60 per share after having a massive run-up of around 2,000%. NIO is still down 56% in the past year. They're a not positive earning company with the EPS closer to 9, okay, -9, so it shouldn't even be there. Now, if we keep scrolling down, we can see that they are getting closer to profitability, but in the last 2 quarters, they're straying further away from profitability, with their last quarterly earnings report being one of their biggest misses in quite a while. NIO reported solid delivery growth for the month of January. Given the circumstances, NIO had the second highest delivery volume of the top 3 EV startups in China in January, once again driven by massive ramp of sedan deliveries. NIO has delivery potential, but likely faces short-term headwinds due to growing prices pressure in the EV industry, aka Tesla with the price cuts. This part goes over a decent start to the year. We will go over more earnings updates, but just consider this. NIO delivered 8,500 electric vehicles in the first year of the month, showing a decline of 11% compared to a year earlier period. And the EV maker reported the second highest delivery volume of the top 3 Chinese EV startups from the month. The electric vehicle company was the highest amount of deliveries in January was Li, okay, ticker symbol LI, with a total of 1,500 deliveries, but even Li Auto has seen a month-over-month drop off because of the major Chinese holiday period impacting production and deliveries. Okay, so that could be bad for earnings. Now we see that XPEV saw the largest year-over-year decline in deliveries as it sent out just 5,200 electric vehicles to its customers. Although XPEV deliveries growth have slowed more than the growth of the rivals lately, I believe XPEV also has a good chance of seeing a valuation rebound in 2023. So these could all be good buys right now. I'll do another future video on a deep dive on NIO, Li Automotive versus XPEV. So make sure you're subscribed with post notifications on, and comment below if you want to see those three stocks deep dive and see which one's the best one. A key reason why I've turned more bullish on XPEV again lately relates to the large valuation decline the company has suffered in 2022. And here we can see some delivery numbers, so feel free to pause the video and go over that. This article gives us some good information specifically on earnings, focusing a little bit more on earnings specifically. The Chinese EV vehicle maker recently reported its January delivery numbers. So going over the January numbers is very important because the guidance is very important when earnings. So we want a strong guidance for next quarter also if we want the stock price to go up. However, if we want to focus a little bit more on the previous, profit and revenue estimates, we can see that in the most recent quarter, the management touted production capacity of 20,000 vehicles per month. However, this is down from prior projections of 30,000 vehicles per month, which could be a very negative thing. That's 50% lower than projections. The decline has been due to major COVID shutdowns in China, amongst other headwinds and macroeconomic headwinds. However, entering 2023, revenue and delivery expectations are much higher, given that the company continues to ramp up additional production capacity. The major question is whether there will be significant demand to meet the production ramps for NIO specific vehicles. Electric vehicle Tesla giant lowered their prices to boost market share, and other EV competitors have followed suit. NIO's management forecasted a 90% rise in fiscal 2023 revenue, which is huge. Let me reread that again. NIO's management forecasted a 90% rise in 2023 revenue, driven by higher volumes. But if NIO is forced to cut projections, or is forced to cut prices to keep up with the Tesla price cuts, its profit margins might not be as strong as expected, which could cause the stock to trade lower in the short term. The company on Wednesday can make a strong case for its value by delivering a top and bottom line beat on their earnings, along with strong delivery guidance for the next quarter and full year. However, with all these headwinds going on with NIO, it's going to be very hard for them to deliver such strong numbers with strong guidance, especially competing against Tesla and all of these other competitors like Li and XPEV at the same time for just a little bit more share. We see them at a resistance right now, and they're under $9 per share. They can be a good price to start dollar cost averaging into very slowly, but I think that they can trade as low as $6 per share again, and even under $6, which is the IPO price once again. So that's where my price targets are to buy for long term. I do believe in the stock for long term and want to be dollar cost averaging into them. There's just so much risk behind the stock that you really have to take it slow, dollar cost average, and their earnings coming up on Wednesday pre-market could push the stock lower under $9 per share, which could be a buying opportunity here also. So thank you guys for all the love and support you've been showing on the videos. Smash a big thumbs up. Comment below what you want to see next. Remember, YouTube is the only place where you get these full-length videos, and I make them and do all this research and effort on the videos just for you guys. So as long as you keep liking these videos, I'm going to keep making them for you. Check out success number 7 on the highlights section of my story if you want to follow along in my private group. Major success has been happening. Thousands and thousands of dollars are being made every single day and every single week. So if you want to get in on the action, message me here on Instagram. Thank you guys for staying to the very end of the video. Share this video with a friend because you know it's an absolute banger video. And I'll see you in the next one. Remember, don't time the market, buy the market. Peace.